Yes, just to, oh, seem to have lost my volume. Hopefully you can hear me okay.
Yeah, fine. I can hear you.
Okay, there we go. Yeah, I've been on the Euro Aussie, and the reason I picked that one up is perhaps if we go back onto the, oops, sorry, there we go, there we go. Back onto the currency strength. This is what I saw setting up, and it's a really good example of using not only the charts in multiple timeframes, but also the indicators in multiple timeframes. As Anna said, I'm a reversal trader. It's what I like to look for all the time. We saw this setting up earlier on in the session. This is the euro, the orange line, which has been climbing. This is on 3 minute, this is on 5 minute, this is on 10 minute, and this is on 15 minutes. So you've got a complete, let's move that out of the way of the chat box. So you've got a complete snapshot, a slice through time of what is going on with this particular currency, and then matching it to an alternative currency to deliver the pair. When we were up and about early this morning, there was a lot of congestion going on. It was quite difficult to dig out trades, but you just have to wait and be patient. And what we're looking for the whole time is for the move that is developing from one time frame to move to the next. So it was setting up here, very oversold the euro. Now it's climbing very, very strongly. The same thing is happening on 10 minute. The same thing is happening on 15 minute. Obviously, as you move out into the slower time frames, that the extent of the move away from a region is less developed. That's what you expect. If we took this out to 30 and 60, it may well still be oversold. The equivalent that we're looking at here is the Aussie dollar, the blue one, which was very strongly overbought up here, kicked down very sharply, still moving strongly lower on 10 and moving strongly lower on 15. So you know that you've got the ideal scenario. You've got this occurring across the time horizons, and it's rippling out from the fastest down to the slower ones. The steepness of the lines give you an absolute clear indication of the strength. So we've got very strong buying of the euro, as denoted by the inclination of the line. It's very, very steep. You've also got very strong buying of the dollar as well. But just to focus on the euro, you've got strong buying of the euro, strong buying of the euro here, and strong buying of the euro here. It's very steep. The line is pointing up sharply. Equally, the Aussie is pointing very sharply to the downside. Same here, same here. So you know for a fact that the euro Aussie is moving. If you didn't take the reversal trade, then the trend is still developing. You can still jump on this move. You've then got to decide what your time frame, what your time horizon is, because I can guarantee you over on the 3 minute, and probably if we went down to the 1 minute, you'd start to see some pullbacks, reversals developing. You can see the Aussie here starting to kick up a little bit on 3. And the point is that if that is going to develop into a full-blown primary trend reversal, in other words, from what was a bullish trend into a bearish trend, then ultimately what will happen is this will get up to overbought and start moving lower, as it will here, as it will here, as it will here. And maybe over here it doesn't even get up here, and probably the same here. This might only get halfway up before it starts kicking down. This might get to the top and start moving lower. This might start around here, and this may even kick down over here somewhere. So you're constantly monitoring, and obviously what you're looking at the whole time, you're looking at this on the charts in real time. And this just gives you, it's the starting point for everything, but it's also the window on what is happening in terms of why things are happening. You will see things happening through the prism of volume price analysis, but you'll also see things happening through the prism of the indicators, because if this euro gets up to an overbought situation here on 3 minute, then logically you would expect it to pause at that point, maybe congest and possibly reverse. That is giving you another piece of information. If you're trading on the 10 and the 15 minute, you may not be too bothered about a pullback here. That may be part and parcel of your stop loss management. You may have it set wide enough. Broadly rule of thumb, the closer you are to the market, then the tighter is going to be your stop loss in terms of number of pips. And the further you are away from the market in terms of time, then the wider will be your stop loss. It's just a very simple rule of thumb. And you've got to judge that according to what you see on the price charts. So it's an ideal opportunity. That's what I was looking for. But if you're not a reversal trader and you want to jump on a trend, then you're maybe looking for crosses here. You're looking for that trend underway. The difference is that as a reversal trader, I have to set wider stop losses because I've got to allow for buffering that goes on all the time down here. These currencies don't automatically always reverse, although here we've got some pretty nice examples where they have done so. But that's not always the case. This could have sat down here for a while, and I would have had a stop loss in place quite wide to allow for the buffering, the oscillation that goes on before the actual reversal takes place. Once you're into a trend, if you're jumping on a trend that's already moving, your stop loss can be that much tighter because you have momentum. The move is already underway. And what you've given up is in terms of, I put a lot of risk on the table because I'm looking for a big return. In other words, I'm getting in early. I'm prepared to pay a higher price for that. If you're jumping on a trend, the price of entry is lower because the move is already underway, but then so is your return. Your return is lower. I'm paying a higher risk for a higher reward. You're paying lower risk for a lower reward. It's the simple mechanics of trading. If you're prepared to put more risk on the table, then by all things being equal, you should be expecting a bigger reward and vice versa. In terms of this move, what else could we have looked at? Well, we could have looked at, the dollar's moving very strongly, lots of dollar buying at the moment. So, the Aussie dollar is moving very nicely at the moment. The Canadian, we've got strong buying in the CAD. We've got strong selling in New Zealand. So New Zealand dollar would be nice when I was looking at that earlier on as well. And a similar picture in terms of, where are we? CAD, Aussie CAD probably. But the currency pairs you wouldn't be looking at because they're moving in the same direction. You wouldn't, for example, be looking at the euro dollar because the euro and the dollar are climbing at the same rate and they're moving in the same direction. So there is no differential momentum between the two. They are both, the analogy I've used hundreds of times, it's the two trains leaving a station. They're both moving at the same speed. There's no differential speed. One might move slightly quicker than the other, but in terms of a trend direction or trend momentum, there's going to be very little because they're moving in the same direction. And that applies to all these currencies. So what the currency strength indicator does also, not only does it tell you which currencies to look for, it also tells you which currencies not to look for. And equally, of course, not only when they're moving in the same direction, but when they're moving sideways. We haven't got too many of those at the moment. Maybe the yen here is flip-flopping around on 5. Flip-flopping around on 3, but when they go into flat line in the middle here, that's when a currency is not moving, it's just in congestion, so on and so forth. Just go back onto the chart again. Where are we? Currency chart, there we go. That's it, that's what's going on at the moment. So this move is still continuing. We've had some minor pullbacks, little reversals, but generally speaking, we're still in uptrend. Let's go on to the 3-minute, there we go. And in terms of where we're heading, we've had a big injection of volume in terms of this particular candle. Anna mentioned support and resistance, which is a key plank of volume price analysis. Trend monitor is nice and blue. It's helping to keep us in. All these levels on here, whether you're on MT45 or whether you're on NinjaTrader, whether you're on what will be TradeStation, these levels are giving us price-based support and resistance delivered automatically by, this is the accumulation distribution indicator. The thicker the line, the stronger the resistance or support. And if the market is to get up to this level, then at 1.77850, there's going to be some maybe a little bit of congestion building as we hit that level. These other levels are less important, they're more minor, and therefore not likely to present strong barriers of resistance to the move higher. This one certainly will. What that will also be counterbalanced by is the volume histogram here on the volume point of control. This is the volume point of control where the market was in congestion for some time, heaviest concentration of volume. That was the fulcrum of the market. The bullish trend has developed, we're breaking away, we've got good volume coming in under this candle. But then as we move up here, this is the histogram displays the relationship between, not just the linear relationship between this, which is volume and price. This histogram then brings in volume, price, and time. In other words, it's displaying the levels of congestion which have been built over time in terms of the volume that has been sitting in those regions. And you can view it in exactly the same way. In other words, the resistance that is likely to result from that can be viewed in exactly the same way as price-based resistance. So this is volume-based resistance we're looking at now. And once we get up to this level, yes, we've got price-based resistance here with the red dashed line, which is pretty strong. But then if we broke through that, this volume is falling away. So from a volume perspective, the market should move through here pretty easily because there's very light volume as we move up into the higher regions. And that's so crucial to you as a trader, because once the price gets to those levels, your expectation is that the market should move through there pretty swiftly because there's very little resistance in the way to cause it to halt.
Just move over 1 second and
Yeah,
back to you.
just going to pass back to Anna. Just whiz around the other time frames. Yep, okay, that all looks fine. You can see the trend monitor here is blue across the time horizons, across the top slice. No change here yet on 15. That will certainly follow through if this market continues to develop. Very strong support platform in place, VPOC there, and we're just pushing higher for the time being. Just going to pass back to Anna.